We've got big news in the cryptocurrency world today. Ethereum ETFs are right around the corner, and there's a major win for Ethereum regarding the SEC. It's extremely bullish for all of crypto. Stick around to the end of this video. We're going to talk about the news, then we're going to talk about some opportunities on PulseChain, and stay till the very end because you might actually learn something. We're going to go over a couple basic liquidity concepts that might be new to you, especially if you're newer to crypto. So watch the whole thing. It's going to be short. The big news of the day is that the SEC closes its investigation in Ethereum 2.0. Look right here. People are chalking this up as a major win for the industry. So Consensus, this is the company, guys. Consensus is the company that created basically the most popular crypto app, crypto wallet called MetaMask.io. Everybody has a MetaMask wallet. And so what the SEC did is a couple months ago, they sent a Wells notice to Consensus. A Wells notice is basically just saying, hey, we're going to investigate you. We don't know. There might be something fishy going on. We're just going to investigate you because we think you might be breaking some rules. And basically what just happened today is that the SEC has notified the company that they're closing the investigation. Now you can read the official letter as well. Of course, they try to make it vague and say, well, we're not saying anything for certain. You know, we're not giving Consensus a free pass here, yada, yada. But at the end of the day, they're leaving Consensus alone. And why is that so important? It's because they're also leaving Ethereum alone. So the SEC decision came after Consensus sent a letter requesting the clarification of Ether's category in approval of spot Ether ETFs. What's the critical piece that you need to know about this? It means that the SEC will not bring charges alleging that sales of Ethereum are securities transactions. So guys, this matters for PulseChain too if you're holding a bag of PulseChain. Why does it matter? PulseChain's a literal clone of Ethereum. The same exact code, minus, a couple different variable changes, like the supply is bigger, things like that. But it is a fork. A fork means a copy or a clone, okay? It's all the same. PulseChain is basically Ethereum. And so if Ethereum's not a security, that's very, very bullish in terms of PulseChain not being a security either. I mean, it makes a very easy case for any lawyer to make, such as, the lawyers in the SEC versus Richard Hart case that are trying to sue, this decentralized software as well. It just gives us that much more confidence that, look, if Ethereum's not a security, PulseChain's a clone of Ethereum. I mean, it doesn't take a genius to figure out and logically deduce that, PulseChain's probably not a security either. And this leads into the perfect timing, the perfect storm, right? The Ethereum ETFs were approved, and it looks like some people are estimating that in early July, the Ethereum ETFs are going to start trading. The S1 forms are going to get filed by all the big companies. That includes BlackRock, Vanguard, all those big companies. And look right here, the approval of the ETFs, even though it's not final, they say, was based on the premise that ETH tokens are commodities, not securities. Extremely bullish. Because if you're not a security, you can get listed on any mainstream giant exchange, Coinbase, Binance, all the big ones. And you don't get sued, you don't get fined. It basically allows the cryptocurrencies to just be open, and more importantly for the sentiment around these coins, so that people aren't scared. People aren't scared of the uncertainty of the lack of rules that the SEC really hasn't even done a good job of creating at all. So look, that leads into the next article. Global Ethereum ETPs to outperform Bitcoin counterparts ahead of the anticipated ETF launch. So people are, front running this news by trading these Ethereum ETPs that already exist. And if we just do a search for July over here, look, we've got certain individuals, certain finance bros, Eric Balkunas and James Seyfarth. Unfortunate name. They launch as soon as July 2nd is the projected. That's projected. It's just a guess. It might not be July 2nd, but that's 2 weeks away, guys. 2 weeks away until billions of dollars come into Ethereum. And then we have our alt season afterwards. PulseChain's probably going to pump along with it. Now, I think it's going to be Ethereum first, but then that overflows when everybody has the wealth effect, right? Everyone's ETH bags just doubled or tripled. So they want to go shopping. They want to go experiment in some new ecosystems. And so this leads me into the next point I want to make. If you are new or if you are bullish on Ethereum and PulseChain like I am, what I'd say for a lot of people coming in, especially if you have a good sized bag, let's say you have like $50,000 to put into crypto. And we don't know any of this. It's all speculation. But let's say you really think, like I do, that Ethereum is going to go up, and you really believe that PulseChain is going to go up. You just don't know when, right? You don't know when. You could take a bet on both coins at once by joining a yield farm over on app.pulsex.com. Link in the description below. So one of the opportunities on PulseChain that's staring everybody in the face, if you're just getting in, think about doing this. I'm personally going to be joining this pool very soon. I'm waiting for some money to clear in my bank account. But I'm going to be joining this Ethereum PLS yield farm. Okay, so look it down here. Look it down here. If you take If you have $50,000 and you take $25,000 and you put it into Ethereum, and you take $25,000 and you put it into PulseChain, PLS token, okay? WPLS, Rat Pulse, same thing. You could do that symmetric liquidity and you could get paid 41% APY, which means, let's round that to 40, okay? So what would that be out of 50,000? That'd be about $20,000 a year that you're making. $20,000 a year of INC token. We can even do the calculator here. Here's a fun way to project how much money you could make by holding these coins. And yes, you are subjecting yourself to impermanent loss, right? Let's say ETH goes up a whole lot. Well, during that time, if you're in this yield farm, remember with 50% Pulse, 50% ETH, and ETH goes up, you're going to have less ETH and more Pulse. But, if the tides shift later on, which is a speculation game that I'm playing, or that I want to play, and you think money's then going to flow back from ETH into PLS, well, then you're going to have less PLS and more ETH. And so it's just a way to play both of these coins simultaneously, regardless of where we're at in the cycle, and get paid to hold these. Get paid for the risk of impermanent loss, right? Now, if you don't understand impermanent loss, I've got plenty of old videos about it. You need to understand that the minute that you park those coins in a yield farm, right? You go to the liquidity tab, okay? You go to V1, and look, you would just add like an equal amount. Let's say you put 10 ETH on the ETH side, 700 million PLS on the Pulse side, 35K of each, right? That would give you a PLP token. Again, if this is new to you, watch my tutorial videos. It's a good time to learn about this while the prices are down because everyone's going to be rushing to learn. The minute we do a 3x or a 4x in the price, sentiment can change on a dime in crypto. It really can. So people are going to be banging on the door trying to get in. Educate yourself now, okay? So you get the PLP tokens by staking it here. You just click the buttons and approve everything. Hop over to the farms, and again, we go down here to the ETH Pulse farm if you want to do this. Totally up to you. I'm just saying this is interesting because you get to play both coins. And you stake that PLP in here, and then boom, you're earning, again, let's say you had $50,000, right? 40% of $50,000 is $20,000 per year. And if you click on the calculator button, okay, let's say, look, $50,000. Currently, that's earning about $25,000. It says ROI per year. And you can even divide this up. So you'd be earning $400 a week in the form of INC token. And guess what? If the INC price goes up, that 40% APY becomes 45%, 50%, maybe 55%. It goes higher because the APY in US dollar terms is being paid out in INC token. So if INC token goes up in USD, obviously your APY in USD goes up. So $400 a week off that investment, pretty amazing yield. You're not going to find this kind of yield in a lot of other protocols. Okay, so if you want to get that, you can always click this link down here. That link is going to auto-populate the liquidity that you need to add. All right, and you could be earning a passive income stream that way. Now, finally, I just want to end with this one tip. So this is something that I don't know if people realize if you're new to crypto. I don't want you to trick yourself by having this misunderstanding of liquidity that some people might have. Look, if I was new to crypto, I could see myself not realizing this. And so we're just going to go over some examples of coins that have this weird liquidity scenario. All right, this is the final topic, okay? We're talking about liquidity now. We're talking about liquidity for all coins, and we're on dexscreener.com. A lot of people go to dexscreener.com to get on-chain information and price charts about coins that are trading on decentralized exchanges. So you can find all the PulseChain coins. You'll find it's usually spammed up with Solana coins, right? Because there's thousands of coins per day on Solana and Base and all this stuff. But you'll see a lot of these coins, right? And people go look at the liquidity. And remember, liquidity is what matters to you a lot more than market cap, all right? So if you think, oh, the coin's got a high market cap, but it's got only very little liquidity, liquidity as a concept just means how much of the coin is for sale. How much liquidity is in the pools, the liquidity pools that you can trade in and out of. So for example, this coin has got $206,000 of liquidity. Right, so you can probably trade, $1,000 or $2,000 or $3,000 at a time with minimum slippage. But for a big whale that wants to dump 50K into a 200K liquidity pool, if you're trying to make a big purchase, that's a large percentage of the liquidity pool itself. You're going to have slippage. You're going to push the price against yourself, and you're going to get really bad rates, bad deals. You probably lose a lot of money if you're not careful. But we click into these random coins. Okay, any one of these random coins, what you'll typically find on other chains, not PulseChain, is we go to this right-hand side here to get the liquidity info. And a lot of people just look at this liquidity number and they say $1.2 million liquidity. That's great, right? I'm only trading with $500, so 1.2 million is more than enough for me. Okay, scroll down. What you need to do if you're a newbie in crypto, if you don't know this already, scroll down on the right-hand side of Dex Screener because I just want to make people a little smarter and more aware. about how liquidity works. Now you can see other chains like Solana and Base, when people are trading these meme coins, they pretty much all do symmetric liquidity. I'm actually shocked how little people know about asymmetric liquidity in other blockchains. Okay, the PulseChain community, they're very clever. Okay, they know a lot of liquidity tricks and games, but if you don't understand the games that these people on PulseChain are playing, you might have a bad time. But look at, this is what symmetric liquidity looks like. So look how there's 1.2 million, right? That $1.2 million of liquidity means that you've got $630,000 of Solana, $630,000 of this meme coin. So it's symmetric, right? These are more or less equal. 630, 629, it's equal, okay? And so we call this bid side and ask side. The bid side is typically US dollar price, stable coins, or the layer 1 token itself, the native coin. Like Sol is the ticker on Solana. PLS is the ticker on PulseChain. ETH is the ticker on Ethereum, okay? Typically, that's the base asset, if not stable coins. It's either going to be stable coins or the layer 1 coin. And so you're going to have primarily one side of the pool, in most cases, unless you're pairing meme coin to meme coin, which is a different story, but in most cases, you're going to have people pairing the layer 1 coin, right, Solana, PLS, Ethereum, to whatever meme coin, whatever they're trying to pool together. Okay, and it's going to be an equal amount. So you got to scroll down to this box to see if it's an equal amount. Again, Solana and Base, typically you're going to see symmetric liquidity. That's what you're going to see on PulseX too. Symmetric liquidity. This is a Uniswap V2 fork, which makes sure that you have to put up an equal amount on the bid side and the ask side. And remember guys, the bid side is what? The bid side is another word for the buy side. People typically buy, degen altcoins on the blockchain using the base layer token. So the bid side, the buy side, is going to be the Solana side, all right? The ask side is going to be the meme coin side, all right? But now let's go over to PulseChain, right? You can see on coins like Hex, for example, this is the Hex chart, Hex PLS. You can see we've got $18 million of liquidity. Scroll down to see how that's broken up. You've got 9 million on the PLS side. What's that? The buy side, the bid side. And you've got 9 million on the sell side, otherwise known as the ask side. So we're just going to call it, Hex, you might want to say Hex is a blue chip, okay. But the base layer coin on a blockchain is what we're calling bid side, just for this example. And you can notice it's perfectly symmetric because all the liquidity in this pair is located on PulseX. It's located on PulseX, and so it's mandatory that you do 50-50 symmetric liquidity, all right. So the Hex pair, and a lot of the pairs on PulseX, all the pairs on PulseX are going to be 50-50 symmetric. But when you get into some of these other coins, okay, I want to point out one that I saw the other day. It's called LHEX. Okay, this is like a Hex derivative token. I've got my eye on this token, and I'm not saying, right, just because I'm calling this coin out, I'm not saying that this coin is like terrible, awful. I've got my eye on it. It doesn't seem to be getting a whole lot of activity right now, but this coin is something that I want to watch. I haven't claimed it yet, but it's something that like eHex holders, I think, can free claim by signing a signature or something like that. But look, I'm going to wait and see. I haven't touched it yet. It's just kind of interesting to me. And I noticed with this coin that even though it says there's $1.7 million of liquidity here, you need to be very careful because almost all of this liquidity is on the sell side. So scroll down. So the moral of the story is when you come to DEX Screener, you come see the liquidity tab over here. If you want to be more advanced, if you want to be smarter, just simply scroll down and look, well, how much of that is on either side? And you'll see here, look guys, this is like the most extreme example, which is why I picked it, is that you've got $1.7 million of LHEX on the sell side and only $7.6 thousand on the buy side. In this case, the buy side is stablecoins, right? Dollars. So there's only $7,000 worth of buy side liquidity. All that liquidity, almost all of it, 99% of it, is in the sell side. So basically, people are single-side liquidity providing using Uniswap V3. Okay, a lot of people are using Uniswap V3 forks. 9mm has one, 9-inch has one. These are alternative dexes where people are playing these liquidity games where they're putting up single-sided liquidity. Now, if you want to understand how that works, I've got a previous video. Go watch that as well. Look, this just tells me that right now in this coin, like, what everybody's done is they've just minted the coin, they've set a single-sided liquidity on the sell side. They don't really have any interest in holding this coin. That's what this tells me. And this can change, right? People are going to say, oh, you're fudging my bags, bro. Look, I'm telling you the absolute real truth. And I'm not saying that I even hate this coin, right? Maybe this coin changes. Maybe people add to the buy side. Maybe it gets popular in the bull market. That'd be great because guess what? I've got a bunch of EHEX. If this works out, I'd like to take a little, it's almost like an airdrop to me, but this is telling me that the market agrees and we're all thinking the same way, right? Everyone's thinking the same way, which is not really great because you've got a massive sell wall on the ask side. You've got a massive LHEX sell wall. 5 billion of these tokens, $1.7 million of these tokens are on the sell side, which means you can only extract at the very most $7,000 out of this liquidity pool. So all it would take is somebody dumping, let's say 100 million LHEX tokens to basically extract nearly all of the DAI in this liquidity pool. So look, when people run for the door, right, when people want to sell, they're going to either sell for the base asset, right, WPLS, if they're trying to accumulate that, or maybe a blue chip that they want to accumulate more of, maybe like HEX or PulseX, or they're going to sell for stablecoins. But you see a big number up here, and it doesn't mean that there's actually that much for sale on the bid side, right? Because everybody just dumped it onto the ask side. Everyone created a giant sell wall, pretty much bigger than I've ever seen. $1.7 million on the ask. So if you dump this coin, all you can get out of this right now is $7,000. And that's why, no one's really done that, right? It's kind of a game of chicken right now. What you've got going on is everyone's like, well, I don't want to sell it because it's too low liquidity. And again, low liquidity, right? Because it's not really 1.7 million. So just look at this down here. You might be thinking, yeah, this is obvious, I know, but look, this is for the new people that might not know this, all right? Now you've got other coins. This is like a very popular meme coin, right? DWB, right? If you go over here, you could say, look, okay, there's this is, respectable. It's not like a crazy buy wall, but there's definitely, 3 times higher sell side liquidity than buy side. So just keep an eye on this, right? You say, okay, $238,000 liquidity, it's good enough if we're just playing around with, a couple $100. It's like you're not really going to notice any slippage if you've only got $500 here. But just keep in mind, this is not like a bad thing. This is just an example of where people have put so much sell side liquidity that the ask side is 3 times higher than the buy side. Right? The buy side is about $70,000 times 3. It's roughly 3 times higher of people trying to sell DWB, which means if you wanted to dump a whole bunch of DWB, there's only really $69,000 of it for sale. So if some whale wanted to do a massive dump, I don't even know if anyone owns that much supply. I don't know if that's even possible, but all they could really get for wrecking this price chart and sending it to almost zero, they could only get like $60,000 worth of coins of PLS if somebody just wanted to dump it and ruin everyone's party, okay? Now, it's okay to have different values here, but just keep in mind that, when you have extreme values like this, you're only going to see this happening primarily on PulseChain, right? I don't think that the Solana boys, the base boys, I don't think they're clever enough to really have figured out UniV3 liquidity in a lot of cases. And really, honestly, V2 liquidity offers a more predictable way for things to pump, right? Because people can't just set up these giant sell walls and like the tiniest little bid support, and because that really doesn't work. I mean, I'm not saying it's never going to work, right? I would like to see things change, right? I'd like to see more people buying this. But right now, if you look at this, you could just say, okay, well, there's a lot more people that want to dump it or that just want to exit that aren't interested than there are people that actually want to buy it. Because if someone's pooling DAI, right? If someone only single-sided pooled stablecoin DAI, dollar coins, right? That would mean they'd be bullish. That means that they are taking a stance that they want to buy the coin. So far, only $7,000 worth of people's money has been allocated to taking the buy side. So just understand buy side, sell side. You're going to sometimes see on PulseChain specifically, right? You're going to see people with UniV3 liquidity. But when you go to PulseX, you're typically just going to see symmetric liquidity, which tells you that, it's even 50-50. So it's actually much more predictable to say if I injected $1 million, you could actually say exactly what that would do to the price, where that'd be much harder to know, and it might have less of an impact if you're doing a giant buy into a giant sell wall. You're not going to you see what I mean? If you're doing a giant buy into a giant sell wall, it's not going to push the price up as much, and if you're doing even a smaller dump, you can pretty much wreck the price chart. Now, look, someone out there is going to get triggered by this, and look, I do think this LHEX thing is interesting. I'm not saying that this ratio of like 3 to 1, ask to bid, I'm not saying that's even too much, but you got to understand that you're really focused on this, the buy side liquidity, how much money can actually be dumped and extracted out of the coin. This matters more to you. So just make another check Add this to your checklist when you're checking on liquidity tools, right? When you're checking on Dex Screener, okay, look at the liquidity, then scroll down and see, okay, well, how much is actually extractable if I want to sell one day? Which, let's be honest, most of these coins people intend on dumping for either, the layer 1, the long-term holds, whatever people view as a long-term hold. Some people accumulate Hex as a long-term hold. Some people do. Or at the end of the day, it's going to be dollars, right? When people really run for the hills, I'm talking about the next bear market in 2 or 3 or 4 more years, they're going to be exiting for dollars, right? Dollars and base layer 1 assets, native assets, right? Blue chip assets. So don't get caught off guard. Hope you learned something new. Again, ETH PLS pair, very interesting pair. Very bullish times ahead. I'm super excited because, guys, one last time, July 2nd. We'll see if this guy is right. We'll see if Mr. Safeart is correct about his July 2nd date, right, for the ETF launch. And just know that the SEC, they gave Ethereum a pass, essentially. They left Ethereum alone. On top of that, their cryptocurrency head of crypto at the SEC resigned. On top of that, they lost so embarrassingly bad, not in the Ripple case only, but in the debt box case as well, that they're getting sued back. Like, they owe money because they literally lied in court in the debt box case. So taking L after L with the SEC. The SEC is the primary enemy of cryptocurrency. So it's good to see stuff like this. And just know that what this means for PulseChain too, for the PulseChain ecosystem, being a clone of Ethereum, well, if ETH is not a security, it doesn't take a rocket scientist to figure out that PulseChain is probably not either. If you found this valuable, make sure you like, subscribe, share the video, leave a comment. All that stuff. It takes you 1 minute. It takes you only 1 minute. And it helps PulseChain go viral. Sharing, commenting, liking, clicking little buttons. That's all it takes. You could actually help me help you. Spread the word, pump all of our bags. It's going to be great. See you on the next video.